Hello and welcome to the show. Today is July 6th, 2022, and I wasn't planning to make a video today, but some news came out, and as you can tell by the title, GameStop announced a 4-for-1 split via Dividend, and they announced this after hours, so I felt the need to make a video. A bunch of people texted me or sent me some comments that said, hey, please make a video. So here I am. Anyway, let me start by saying that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. So here is GameStop's investor website and specifically their newsroom section where they announced a 4-for-1 stock split. This was done after hours. Here's the actual announcement. If we look at it, I'm just going to read it to you. It should be self-explanatory, but in either case, GameStop announces 4-for-1 stock split. July 6, 2022, GameStop Corp. today announced that its board of directors has approved and declared a 4-for-1 split of the company's Class A common stock in the form of a stock dividend. Company stockholders of record at the close of business on July 18th, 2022 will receive a dividend of 3 additional shares of the company's Class A common stock for each then held share of Class A common stock. The stock dividend will be distributed after the close of trading on July 21, 2022. Trading will begin on a stock split adjusted basis on July 22, 2022. Okay, and on the right, I put together a quick chart, which I believe summarizes the entire thing. There's a 4-for-1 stock split in the form of a stock dividend. It's not a straightforward split. It's a split in the form of a dividend. In order to receive the additional shares, you must be a holder of record at that date, and then you will receive shares from GameStop directly. Okay? So, the date of record is July 18th, 2022. The amount of the dividend is 3 additional shares for each share you have. And the date of the distribution is July 21, 2022, after the close of trading. That's when you will receive the actual dividend. It will be distributed at that point in time. Now, the date that the first split adjusted trading begins will be the following day, July 22 of 2022. A lot of twos there. This is the SEC filing. Links will be provided as well. Of course, it basically says the same exact thing. I'm not going to read it because it's the same exact thing. But they included the press release in there. So there you go. I put this together in the form of a calendar because I felt it was important. These dates actually have a meaning right now. Today is, of course, July 6th, when the announcement happened. We have next week. Nothing's going to be happening in GameStop at that point. However, the date of record is happening on the 18th, which is the following week. The date of the distribution is that same week on the Thursday. And on the Friday, that's when the first day of split adjusted trading happens. Okay? During all this point in time, the stock may experience a lot of volatility. Okay? So the question comes up, why do I care? If I'm a GME shareholder, should I care? Well, I should know that on July 18th, I will get 3 additional shares for every share that's held on July 18th, 2022. So if I want those shares, if I want those 3 additional shares, I better not sell those shares on July 18th, 2022. I better have them free and clear in my account, okay? The shares will begin trading on a split adjusted basis the following day. Okay, that's the important thing as a shareholder. Okay, what about shareholders who loaned out their shares to shorts? Right, they were getting that sweet borrow, that sweet cost to borrow fees, right? Well, if you loaned out your shares to the shorts, you won't get the dividend from GameStop. Okay, you might get it from the shorts who borrowed your shares. You might not. Who knows? But if you loaned them out to shorts, I don't know. Chances are, you're trusting your shorts now to give you back that dividend. But you know that you can always recall your shares, right? And if you recall your shares from whoever you loaned them out to, then you'll get the share dividend directly from GameStop. They have the shares. They can give it to you. Guaranteed. Not a problem, okay? So it's possible that a large number of people who actually loaned out their shares to shorts might start recalling their shares. It's possible. Now, as the shares get recalled, it's possible that the shorts may have problems trying to find the shares to borrow, right? They have to have those shares to borrow. Some of the shorts may have to actually close their positions, and that means forced buying of GameStop, right? And it's quite possible that the share price of GameStop could experience some explosive upward price movement. Those are my words. As you know, a bunch of shorts are forced to buy to close their positions. I don't know how many shorts there are. It could be a lot. Could be very few. But all I'm saying is, I'm not a financial advisor. It's not financial advice. This is intended for entertainment and educational purposes only. Okay, so do your own investigations. What about the overall market? What do I think is going on with that? Well, if there's a large number of GameStop short shares, and if there are actually more shares that are short than shares that were issued, it's possible that the share price, that the shorts may not be able to deliver, right? Because how can you deliver something when it doesn't exist? And it's quite possible that the price of GameStop may go really, really high as people are attempting to deliver shares that they don't have. Now, the shorts and market makers testified before Congress in the congressional hearings that they have closed their positions. But if they haven't, or if they've opened new ones, these people, it's quite possible they might get margin called. We may even see something like a gamma squeeze. This is what happened before. This is Thomas Peterffy, and he basically explains it in a nice way. I'll let him speak.
The longs repay their margin loans and exercise the calls, their brokers would have been obligated by the rules as they are today to deliver to them 270 million shares, while by only 50 million shares existed. So when the shorts cannot deliver the shares, the broker representing the longs must, by the rules of the system, go into the market and buy the shares at any price, pushing the price into the thousands. So as the price goes higher, the shorts default on the brokers. The brokers now must cover themselves. They push the price further up. So the brokers default on the clearing houses, and you end up with a complete mess that is practically impossible to sort out. So that's what almost happened.
That's what almost happened. Okay. Now, I played this video I played this clip of Thomas Peterffy in my last video. So if you've seen that, you basically knew what he was going to say. It's possible he got some of the numbers wrong. I mean, there's actually 70 million shares that exist, not 50 million. So, but you know what? When you need to deliver more shares than actually exist, which happened in the past and could happen in the future, you may see a similar situation. I don't think anything's changed since then. I don't know of anything that's changed since then. So who knows? Who knows? This could be a massively important event that's coming up. Okay, so if the shorts get margin called, okay, and they can't raise enough capital to buy the GameStop shares, right? Or they don't have enough capital to cover GameStop shares, then they may not be able to deliver their shares, right? And if they get margin called and they can't deliver the shares, their other assets would be liquidated in order to raise cash to buy GameStop. Because the broker-dealer, he's not going to commit suicide to protect these shorts. He may like the shorts and all that, but he's not gonna go bankrupt for them. I doubt that. I mean, these guys don't really operate that way, I think. Now, if there's a large number of shorts, okay, and there's a large number of these liquidations that happened, right, it's possible that all these other assets could get sold. And if all the other assets are basically the S&P 500, you could see the S&P 500 crash in order to pay for GameStop shares. And they can't pay for the GameStop shares because if there are more shares that need to be delivered than exist, They can't pay for the shares. They can't buy the shares. They don't exist, right? It's quite possible. So it could go astronomical, right? I don't know. Who knows? Again, like I said, I'm not a financial advisor. This is not financial advice. This information is meant for entertainment and educational purposes only, okay? So this is the dates that I see happening. I posted these dates before in a calendar. Don't know if anything will happen during these dates, but, it's quite possible that the shorts might start to try to cover the shares before the shares go astronomical. Who knows? They might. If I were short, I wouldn't be short in the first place, but if I were short, I'd have tried to cover my shares a long, long time ago. But, yeah, there's not going to be that much time because soon they're going to have to deliver 3 shares, right? 3 shares for every share in existence. Not just 1 share. 3 shares. And they're going to have to do it by July 21st, 2022, right? On July 21st, 2022, the stock price will still be, it's pre-split, right? It won't be at a lower price, but you got to deliver 3 shares. The only place those 3 shares can come from, is GameStop. Where are the shorts going to get these shares? I don't know. They, if I can see this coming, they can see this coming. So they better start looking to deliver those shares. See what happens. Anyway, that's all I have to say. That's about GameStop, the S&P 500, the Dow Jones. That's what I'm not a financial advisor. This is not financial advice. This information is for entertainment and educational purposes only. Have a nice day. Goodbye.